Every time the Fed raises interest rates, it could be affecting your credit line. I'm going to share some things that you really need to consider. So all these talks about rising interest rates, inflation, the Fed has been raising rates in order to counter inflation, which in a way is a good thing. But if you've got a credit line or bank financing or any type of credit that's tied to prime rate, then every time the prime rate's increasing, it's increasing your cost of capital. So some things that you really should be thinking about or should consider to save yourself some money. One is can you lock in the rate in your line of credit or whatever financing that you have outstanding right now? Two is if you have a credit line and rates are adjusting, and especially if your line is maxed out and you don't have a big plan to pay it down anytime soon, you may want to consider converting it over to a term loan, and you can term out that line of credit so you can lock in a rate today before rates go higher. On top of that, you can lock in a rate, get a longer period of time to pay it off, have a set period of time to pay it off, but also know exactly what you're paying so you're not blindsided if rates really go up big time. But before you panic and freak out, what you really need to do is understand where is your rate. Prime rate was as low as 3.25% just over 2 years ago. And then now it's gone all the way up to about 5.5%, and it could go higher. But before you freak out and panic, you need to understand what is your credit line tied to. A lot of times people have what's called prime rate plus zero. So meaning like if prime rate's 5.5% right now, that's your rate. But a lot of times it's prime rate plus 2 or 3%. So let's just say it's prime rate plus 2%. That means your effective rate, prime rate's 5.5 plus 2%, your rate's 7.5% right now. So before you freak out and panic, what does that do to your payment? Are you all good? Can you handle that? Or is it time to look at maybe refinancing that line, locking it in, and can you get a lower rate? So you may be able to go to your current lender or bring in another lender and look to moving into a fixed rate type of product. But before you panic, know where your rate is, understand where it's at. What does that do to your payment before you do anything?